Benedict, I know you are a heavyweight in the investment arena.
Versus doing the rock, right? Clearly,
Yep.
no heavyweight. Marcus, my buddy just bought coin at
Yep.
50,000 and now it's gone to 70,000. That's the thing, I'm going to buy my next Maserati.
Hi, and welcome back to On The Block, a Web3 talk show where we talk about anything Web3, digital assets, and cryptocurrency related. My name is Marcus, and I'm from Symphony Digital Assets. I'll be your host for today. Over here, we have Benedict Yap from Sygnum. Seems to be a trend where we get bands onto our show. The previous guy was also called Ben. Benedict, could you do a self-introduction and what you guys do at Sygnum?
Sure. Thanks, Marcus, again for having me here and the opportunity to share with you some thoughts today. Well, I've been in the markets for 22 years now, primarily very much focused on in the space of asset management, across a value chain-wise, across manager research, fund selection, to being a product specialist, speaking to CIOs, trying to present a strategy from equities, from fixed income, as well as hedge funds.
Yep.
And then finally, of course, stepping into the crypto space here. Yeah. So Sygnum is a digital asset specialist, right, with headquarters in Zurich and Singapore, with expanding global presence in the Middle East, Abu Dhabi, and of course, Luxembourg. On our end, I think the capabilities-wise, very quickly, at least the various pillars within the business model would include banking, would include asset management, brokerage and custody, as well as tokenization, among others. Yeah. So in a nutshell, that's what we offer.
Sounds cool and fun. I mean, me being in the industry too. So what are ETFs, right? They are, in short, acronym for exchange traded funds, a pooled investment security that can be easily traded on a public exchange, just like any public listed stock. And so in Singapore, we have the Singapore ETF, right? It tracks the Straits Times Index, comprising of 30 over blue chip stocks. In the States, we have Vanguard, where it tracks the S&P 500 index, comprising of large cap stocks or stocks of companies with total outstanding shares greater than US 10 billion. So like things like Magnificent Seven. On the other hand, we also have the Bitcoin and Ethereum ETF, big in the news with varying players in the market, people like BlackRock, Grayscale, Fidelity. And honestly, it's quite an exciting time to be in the crypto industry. Wouldn't you agree, Benedict?
Exciting times, I think, absolutely, right? We've come to a nice maturity, if you will. I mean, if you look at the curve, if you want to draw a curve, or for that matter, even if you look at the price of Bitcoin, or, to give you a sense of where we are, you notice that there's a bit of that, that huge rally up. So we've had four, bull cycles right now. Many people say we are in the fourth. The question then becomes, if you look at price movements for Bitcoin, it's big. It's rise, but it's beginning to sideline a bit.
Yep.
So I know as with all things, the bit of that sideline is really a precursor to that next spurt, if you will.
Ups and downs,
Yeah,
ups and downs.
absolutely.
Like
So when we say exciting, the question then becomes exciting from a various set of multitudes, right? As opposed to one angle, which is one dimension, price. Was it all about price?
Yeah.
Once upon a time, it was all about price.
Yeah,
You
tech
buy it.
plays a part.
Exactly. Right. You buy the coin at 300, you wait for it to go to 60,000, boom days, everybody's happy. But the scenario now is people are beginning to ask, what are the applications? Right? Blockchain, could it be the next altcoin, the next layer 2, which is where, to your point, the excitement and the growth kicks in.
And so before we begin proper, I have some quick fire questions for you. No explanation, no reasons given, and we will leave the audience to figure out for themselves.
Right.
And so coffee or tea?
Coffee?
Okay. Books or podcast?
Books.
Pay now, PayLah, or cash as a Singaporean?
Cash.
Okay. Next one's going to be a little bit contentious. Bitcoin or Ethereum?
Bitcoin.
Okay. And the most appropriate question for the day, is it ETF or DIY, short for do it yourself?
ETFs.
Of course. And Benedict, I know you are a heavyweight in the investment arena, given your 2 decades worth of experience, rich in the financial markets. Could you share a brief outline of the history of ETFs and your experience with it? It could be your personal investment journey. It could be throughout the various stints in your career.
Sure, Marcus. Maybe just to clarify on a lighter note before we deep dive into the history and the outline, if you will. heavyweights are all that comment is always relative, yeah. So
Yes, of course.
versus
You of course don't look heavyweight on the outlook.
versus doing the rock, right? Clearly,
Yep.
no heavyweight. But anyhow, back to your question. Well, ETFs, it'd be surprising, not surprising, but rather really a mark of how time flies, right? We are 30 years into the business now. So the first ETF was launched in '93, US listed ETF, SPDR, Spider, right? Tracking the S&P 500, as you mentioned in the past. The idea of the concept of the ETF, on the other hand, came before that. So in the 80s and the 90s, and then of course 93. But if you rewind it a bit more and you go back to 73, that was when Burton Mackell, I'm not sure if you've heard the name, wrote this book called Random Walk Down Wall Street.
Yep.
One of the 101 books to read for all the young guys or young ladies as well, starting into the field, where the point was being made whereby it's better to be simply investing passively in an index than to try and pick names or try to be a hero and act cute in active management. So across the years, various papers have been written, academic as well as on the bookshelves, if you will, and
financial blogs.
Exactly, right? And the overwhelming view is that yes, we might as well just buy something that tracks the index.
That's right. I mean, I read financial blogs in my earlier days, and everyone was just park your money in the ETF, in the index fund. And historically, I think we're looking at somewhere 7 to 8% for S&P. And the S&P in itself, I think since its inception in 1957, we're looking at somewhere between double digits, 10.1, 10.2% in average historical annual returns. And so we are talking about ETFs, but specifically for today, we're talking about cryptocurrency ETFs. So Bitcoin, Ethereum, big in the market, hot in the news, and at least for this year. And so we have Bitcoin ETF launched and traded in 12th January, I think.
That's right.
Yeah,
yes.
and so trading volume was somewhere between well over US 4.6 billion. And the Ethereum ETF, approved in the previous quarter, just started trading on 23rd of July.
That's right.
And well over US $1 billion in first day trading volume. Back to you. In your opinion, what are some of the benefits that these cryptocurrency ETFs play for the market at large?
Sure. The interesting point about your question is the benefits, right? So, I mean, clearly, if you were to look at it from a 30,000 feet point of view and just look at the clientele, the demand. So, as with all things, we go back to 101.
Yes.
We go back to demand supply. Your current pool of investors who are already in the crypto markets will primarily be your natives, your degens, your OGs, right, as the terms come to play. And then you have the larger bulk of the mainstream average investor, which would include the institutional investor, who have yet to take that first step. The question then becomes, why have they not taken that first step? And for that matter, why is there that long tail of individuals who are a bit more ahead of the curve?
Yeah.
So on that end of the part, or rather that end of the conversation, the question that should be asked is for the insti investor or the other less acquainted investor.
Yeah.
Why haven't they taken that first step? And that's where it becomes a case of a lack of familiarity, a lack of security, having to on-ramp, off-ramp, the various
having your own
hurdles,
private keys,
your
wallets, things like that. It's just,
Which is where then the onset of the ETFs provides that conduit for individuals or investors such as these, who can then say, okay, now I don't have to worry too much about all the issues I've talked about just now. Because ETFs, I'm familiar, as we talked about just now, 30 over years of being in the market. Can I just use that instrument to get exposure to the coins, to crypto?
Just call my broking firm
you have it,
and use back my same account, right? Yeah.
Bingo.
Yeah. And so I think some of the other benefits that also it's often overlooked. It's previously Bitcoin and Ethereum was always just about reporting about price, right? But having the ETF launch, it's reported globally. And so there's that increased attention and likely increase in market participants in that sense. And I think this will be an appropriate question for you, given that you work in Sygnum, global digital asset banking group. Cryptocurrency ETFs generally seen as a positive or negative for businesses like yourself?
Exactly. Good question again. And maybe we go back to the earlier phase of our conversation. Does it have to be a negative or positive?
Yes.
Because-
it's always nuance in that sense.
Exactly,
Yeah.
right? Your central exchanges exist for a reason. Your ETFs exist for another reason.
Yeah.
So the chaps, therefore, who are already investing and again ahead of the curve, and they're so used to using your centralized exchanges
Yep.
to trade their coins, to have that single point of liquidity provision, notwithstanding that the wallets and everything are kept with under the custodian of the central exchange. Yeah. They're used to it. Whereas the individuals, the investor pool that has not invested based on the exchanges, be it decentralized or centralized, and they're using ETFs, that's again a different. So it's a bit of a separate considerations at play per se. So I think there is no immediate response or impact per se for the centralized exchanges because their clientele, their target market remains a bit intact.
Yeah.
Niche is a very good word.
It's
to
like
use,
it's kind of like every exchange still has a role to play in
There you
the
have it.
wider view of things, where every individual investor, it's just different in that nature.
Correct.
You have insti, you have retail, you have accredited investors. And so we have Bitcoin and Ethereum ETF, just to avoid any speculation on what kind of coin will go up next. But do you think other cryptocurrencies will follow suit? I mean, I was just reading, like, we have VanEck and 21 Shares just recently filed for their Solana ETF.
That's right.
With the SEC, pending approval. Yeah, but over back to you. Do you think anything will follow through?
So Marcus, interestingly enough, at the start of this week, we were having our conversations internally, right? And the research views and all we were trying to construct. And apparently this topic came up again. It's what's the next wave going to be, right? And similarly, I think if you listen to the observations on the ground in the street, there is talk of Ripple ETF. So I think there will be the speculation, very good word to use just now, right? And as long as the altcoins are around and you have your ETFs coming to play, people will always be asking the questions. Then we dig one level deeper and we lift up the hood and ask a bit more of a differentiated, a bit more fundamental question.
Yeah.
What is the use of the coin?
Yeah.
What is the use of whichever instrument that's going to come to market? And in this case, you have your Bitcoin, your Ethereum, all again, to my point again at the very start, having a role to play, having a purpose.
Yeah.
Right, being your various layers per se.
Layer 1, layer 2.
And Ethereum on the other hand, proving that it can match Bitcoin in its contribution to the growth of the sector.
In addition to the smart contracts
Precisely.
that it provides.
And hence, when these two come up with in ETF forms, or rather are presented in ETF forms, the investor pool that naturally be inclined to have some degree of demand because it makes sense.
Yeah.
On the other hand, your other coins, you need to first find out their utility, what is it that are contributing, their use cases.
Yep.
So which is why there may be that bit of a pause, if you will, right? But then again, 2025 is just, 5 months away now.
Yeah,
right?
just round the corner.
and given the rate of change, the pace of growth, I think never say never. I think that would be a good answer. Yeah.
Nice. And I mean, having cryptocurrency ETFs means for US citizens, they would be able to use their 401k to invest in them. And so in the Singaporean context, that would mean using our retirement accounts from the Central Provident Fund to invest in an instrument like that.
Yeah.
And I mean, to me, it's quite a benefit for the end user, but I'm not entirely sure if it's a benefit in the eyes of the government, having to allow your citizens knowingly well that to use their retirement monies to invest in financial product nonetheless, but which has historically lots of price volatility.
Right.
And so what are your thoughts on that?
So this is where I caveat my thoughts, So I speak for myself. And I think the beauty of your question is that you're asking about retirement monies.
Yeah.
And if you think about the word retirement, it's exactly that, right? You've slogged all your life and finally you get to have some airtime, get some downtime, either
10,
with
20
your
years.
Exactly, right? With your families, with your loved ones. And precisely because you have that connection to family, you have connection to loved ones, your connection to legacy.
Yep.
Hence the concept of retirement income or retirement savings, if you will, takes on a slightly deeper meaning. Right, which is why if you observe some degree of caution, some degree of advice saying that only invest in what you know,
Yeah.
or rather only put your money down into things that you know. I think it makes perfect sense.
Yep.
So the question therefore for whether it makes sense to use your retirement monies for crypto ETFs or crypto for that matter, I think we can actually enlarge that scope to saying anything. So it could be investing in commodities, you could be investing in gold. And I think now you look at where gold is right now, the price of gold, and people are thinking, okay, could it be the next hedge against a potential fall in a certain currency, right? Kind of thing.
Yeah.
And you can't go to the street. I mean, we are surrounded by a few shops here which sell gold and then everything. But you just go and buy the gold, or is it make more sense to buy an ETF exposed to gold, right?
Yeah.
So the same thing, I think. So I think maybe the larger principle is for when it comes to your retirement, your savings, because of the importance of that pot of asset, I think there needs to be some degree of understanding what your needs are, understanding your risk tolerance, and then trying to find someone, at least perhaps someone like yourself, who
probably you are the more experienced asset manager.
to think about constructing something that makes sense.
Yeah.
So ultimately, I think we let's move away from this FOMO thing, right? Marcus, my buddy just bought coin at 50,000 and I was going to 70,000. I'm going to buy my next coin, whatever it may be, and next thing you know, I'm going to buy my next Maserati. Let's move away from that.
Yeah.
Go lose the emotion. Think objectively, what is it that you want to achieve?
Yeah.
And in the event that having some exposure to crypto makes sense, why not?
Yeah, I mean, from an investor's portfolio, it's all about allocation, percentages. It's not just about your retirement account and all in, that kind of mindset.
Because the Marcus, if I maybe just to add one more point, I mean, the bit more, I've seen managers, right, be it the super sophisticated ones, the big boys, the 800-pound gorillas, right?
Yeah.
They have exposure.
Yeah.
They won't shy away from crypto.
Yeah.
They'll tell you up front, I'm using it as another lever for alpha. I'm using it as a source of risk dampener, a source of managing my portfolio volatility.
Yeah.
But all taking into account risk. So it's not blind following. It's not FOMO.
Yeah.
All very calculated. And I think that makes the proper sense.
Yeah. It's always about risk to reward. And
exactly. Yeah.
just managing expectations and your own emotions as you allocate your own investments. And so wrapping up the show, we have one final question for you. Besides ETF approvals, ETF launches for cryptocurrency, are there anything on the horizon that you can share with me and the audience on when it comes to the convergence between crypto and the TradFi market?
Sure. Well, I mean, two ideas come to mind, actually, a couple of ideas, actually. So first would be derivatives, right? I'm a big fan. I have huge respect for all these quant wizards, if you will, right? The guys who are trading over and above the instrument itself, the coin itself. And this is the beauty of what we call trad and digital. People keep saying, or rather the consensus, the market view is that, there's a gap between trad and quant and digital.
Yeah.
Is it necessarily a gap? Or is it more a need to come together, at your point, the word that you use, convergence. Right? And, the ability to then think of strategies, to think of implementation, on how to use either coin movements, patterns in prices, volatility, styles, if you will. And that's where your derivative exposure comes in.
Yeah.
That's where you get to create what you call it, structured products, which is what in itself is a growth of the financial industry, in this case, crypto, right? So once upon a time, equities used to be buying XYZ company, waiting for dividend flow.
Yes.
Change in price, everybody's happy.
Yeah.
But as with the evolution of the brain, right? I mean, full credit to the human race, if you will, thinking of new ideas, how to make use of that change in price to derive more cash flows.
Yeah.
So I think that would be one angle, the derivative play. The tokenization play as well. I think it's again, I kind of appreciate that point of view, because if you think about tokenization, really the principle behind it, I mean, notwithstanding implementation is probably where we are right now. Local players in Singapore particularly are trying to see how to various projects on the run,
MES,
per se, and all.
Different projects. Yeah.
But the idea, if you go one level up, the spirit of it, be it tokenizing art, tokenizing wine.
Yeah.
My personal favorite, I'm not sure if you've heard of it yet, tokenizing comics.
Like the IP?
Yeah. And manga as well, I'm a big fan because, this helps to create the exposure, accessibility to people, to the common man on the ground.
Yeah, I don't just buy the comic from the bookshelf.
Exactly. Or for that matter, the comic which has appreciated in price,
Yeah.
some of us may not have that money to buy it. So if I
Yeah.
can buy a token of it, a fraction of it, and maybe use it as an investment, why not?
Yeah, I mean, I was just reading a report by McKinsey and Company.
Mm.
So they were projecting worth well over $4 trillion in tokenized assets when it
Right.
comes to the market cap.
Exactly.
I mean, it's a bullish case, but just imagine the whole financial market coming on chain globally. Like you have things like 24/7,
Yeah.
instantaneous settlement, depending on which blockchain you launch on, and just not having to sync up your time zones, right? Everything is smart contract, automated, things like that. So like tokenization, I'm huge on tokenization.
Okay,
too. Like
right, good.
back in my team, we are working on tokenization, working on products related to it. Yeah, so like the space is as exciting as it can be. It's not just about prices. It's about also how tech is advancing
Exactly.
and how more financial products which are being rolled out for the common man, the mass market, is actually being structured. And so thank you once again for coming on to the show, Benedict. Really appreciate all the valuable insights that you have shared with us today. I think me and the audience have much to chew on and digest. And to all the audience out there, thank you for staying with us till the end. If you have any burning Web3 questions, feel free to shoot them in the comment section down below. And until next time, where we decrypt the digital space block by block.